Globally, let's now talk about how all of these overnight cues impact our own markets, as well as all of the individual stocks that you should watch for in today's trading session. We have our research team here with the trade setup. Nigel, Vivek and Surbhi are all with me now to really prep you up for this trading session. Guys, a very good morning to all of you. And Vivek, let me come across to you first. We were just going through the global setup, which doesn't look so positive. And, you know, it is looking like we will get a start, which is deep in the red. But take us through everything that we should track from a domestic standpoint.
Good morning, and you're absolutely right. You know, the overnight or the kind of handover that we've gone over the extended weekend has been quite muted, despite the fact that the US government shutdown has been averted. Most of the US indices have closed in the red. Now, the other thing to watch out for are oil prices, and that's going to act as a bit of a soften as far as the blow that we're going to receive today morning. Now, crude oil prices have corrected quite significantly from the top, almost 3% from the top has what the correction has been like. Now, coming to the Indian markets, Friday's close was quite interesting, given the fact that after two consecutive sessions of significant selling pressure, Indian markets continue to bounce back in significant fashion. In fact, the pharma pack was the one that was the key standout performer, and whether that outperformance can continue is something that is going to be important to watch. The metal pack too was strong. However, the IT pack or the Nifty IT index was one of the top brags. Now today, a lot of important events. Number one, the listing of the second largest sports player in India, JSW Infra, that will be keenly watched. Apart from that, all of the auto stocks after the monthly updates, you'll have to see the reaction over there. And banks too, quite a few banks have gone ahead and reported their monthly, quarterly updates. So that will be another interesting pack to keep an eye out for. Asian markets and Gift Nifty, like you mentioned, indicating a subdued start for our own markets.
All right, Vivek, thanks a lot for running us through all of those cues. Let me also toss it over to Nigel now, who's looking at all of the cues from the futures and options space. Nigel, coming out of a long weekend, how are things looking?
Well, the weekend was very good, right? And good to have you back, Pavitra. But we had a good start, actually, to the October series. On Friday, the markets looked quite good. And there was a bout of short covering that did take place because you had the Nifty as well as the Nifty Bank higher. And the open interest on both those two were lower by around 3 to around 4.5% odd. What did the FIs do, though? They continue to add some short positions. So they added close to around 4,000 short contracts, and they unbound some long positions, which takes the short positioning now to around 72%. That's the highest I've seen all the way since April itself. On the index option side, well, they bought 1 lakh calls, and it was in the ratio of more calls in comparison to puts. And on the writing side, well, it was pretty much even Stevens, with few more puts getting written in comparison to the number of calls that were written. Which brings us to the levels. Remember, on Friday's trading session, things really looked good. But if you pull up an intraday chart, you'll see that we went closer to around the 20 DMA, and from there we did see some bit of selling. So the 20 DMA becomes a line in the sand. The bears will be feeling confident they can defend this 19,750 to around 19,800. Just take a look at that. Intraday chart is what we saw. The recent low, that's on the 28th of September, which was expiry day. We went down to around 19,500. That becomes a crucial support zone. The Gift Nifty suggesting we pull back close to around 100 points or thereabouts. It'll be an interesting trading session. For the time being, I think we continue to trade in that range of 19,500 to around 19,750.
All right, Nigel, thanks a lot for getting us all of those cues. That is where the implied open is at right now, currently 130 points in the red. Let me also bring in Surbhi now. She's looking at the entire list of stocks that you should watch for in today's trading session. Surbhi, the big news clearly coming through from Vedanta.
You're absolutely right. So the first one on our radar is going to be Vedanta. They've announced the demerger of its diversified business. So 1 share of Vedanta Limited shareholders will receive 1 share of 5 newly listed companies. Next is some banking stocks. They've come up with a Q2 business update. IndusInd Bank, the CD ratio is at a 12-quarter high and a CASA ratio is at 25-quarter low. The deposits are up 14% on a year-on-year basis. Federal Bank, the CASA ratio is at a 14-quarter low and the deposits are up 23% on a year-on-year basis. Karur Vysya Bank, the strong loan growth, the CD ratio has also improved and the deposits are up 13% on a year-on-year basis. Apart from that, auto companies will also be on our radar on the back of September sales numbers. Maruti saw a low single-digit growth and total sales were up 3% at 1.8 lakh units. M&M, it was a mixed bag, very strong SUV sales. However, tractor shows weakness. Total auto sales were up 17%. Hero Motor, the total sales were up 3.2%. TVS Motors, the sales were higher than the Nomura estimates. The total sales were up 6% at 4.02 lakh units. And lastly, Bharti Airtel will also be on our radar. The company has announced that it has over 50 million unique 5G subscribers. The total subscriber base is now at 338 as of Q1 of FY24.
Okay, that is a long list of stocks. Surbi, thanks a lot for filling us in with all of that action. With that, it is time for a short break. But as Surbi was just mentioning, Vedanta has undertaken a big restructuring exercise. So we're going to get into a break. But when we come back, we'll talk all about this and bring you the details with Nigel.